JB here. I'm out here drinking my coffee in front of the office. Thought I'd give you guys some market predictions for 2017. I want to thank everybody that's come out to any of the events Tom and I have been at or have hosted. We've talked to thousands of people in the last 2 weeks. It's been pretty wild. So I thought I'd give you guys some market predictions for Houston and maybe some for Texas. I'll tell you, multifamily. It's pretty much been our stance for the last year to 18 months to not touch multifamily. Rental rates are at all-time highs, occupancies are at all-time highs, and cap rates are at all-time lows. They're way too hot. They're way too overpriced. I had met with a banker of one of the largest banks in Houston. It's probably almost 2 years ago. And they aren't even lending on multifamily, and that was one of the largest products that they were lending on was multifamily. So I feel real sorry for those folks that bought Class C's at 7 and 8 caps. I think they're going to get hammered. Unfortunately for them, they're going to end up out of business. Sorry, I'm looking at my coffee. They're going to end up out of business, and we're going to be able to pick up some sweet deals. A lot of questions I got about the Trump presidency. Nobody has a clue what they're talking about when it comes to the Trump presidency. Not a freaking clue. You can't model this guy. He's just going to go out and do it. I can tell you in general what I have seen from him in studying some of his stuff over the years. He is all about a strong dollar. He wants America first, a very strong dollar. Typically, if I were to generalize that stance, that's typically bad for real estate. However, he's a real estate guy. So I've read some of the stuff. Probably the most important interview that was given from, about, or by Trump is actually the interview from Bannon that was out in wasn't the New Yorker, one of those magazines. His right-hand guy. I would highly recommend you read that if you want some predictions on what Trump's going to do. He is a real estate guy to the core. And what do real estate guys do when interest rates are at all-time lows? We borrow a lot of money and upgrade. And I think that's what's going to happen. But in any case, is what the president is going to do keep you from building your business? I'd recommend you build your business regardless of who's in office. I can tell you Obama certainly hasn't helped, especially with the things that have happened with Obamacare. Just as a side note, I think our premiums more than tripled in the 3 years since we started our business. So that definitely has an impact on small business. Huge impact. So as far as Houston, houses above $250,000 to just under $1 million. Watch those markets that you're investing in. We have seen a substantial slowdown, continued slowdown in some of those submarkets. So that's a cause for concern. I think what else? I think that's about it. I mean, I don't want to get into the technical forecasting of this is what's going to happen in oil and gas and how many jobs are going to get created here and all. It doesn't really matter. What matters is what's going on in the submarket in which you invest. So I'll give you a good example. I was chatting with somebody after one of the events, and they had bought a house in Oak Forest to flip, and that market completely imploded on them. And so they had to kind of catch the top of the next bottom, if you will, and mark their property down so they could move it. The fascinating thing was, if you were to look at the HAR report, it said that everything was great, home sales were up, average price was up, median home price was up, everything's rosy. And certain submarkets, it was a bloodbath. So before you make a purchase decision, the best place to find local market data is to run comps in that submarket. I get this question all the time. Jason, do I look at an entire zip code? Do I look at, 5 miles around that area? No, you do not do that. You look at that little neighborhood. So here in Houston, we've got Cinco Ranch, right? And we've got like all these other master plan communities. And they have multiple neighborhoods inside those big master plan communities. So the question was, hey Jason, if it's in Cinco Ranch, do I look at comps for all of Cinco Ranch? No, you look at like lakes of Cinco Ranch as an example. So you want to hone in for like kind assets. In other words, something that's very similar to the house you're considering purchasing and leasing, or purchasing and flipping. So I would look at that. I would ignore all the other stuff out there. Most of it is of little value. So I would just look at what's going on in my little submarket, and I'd look at a couple of things. How many houses have sold in that market in the last 6 months? Then I would compare that to how many houses are available for sale on my market. If that inventory, if that number is growing, you are in a declining market. In other words, let's say you had 5 houses that sold in the last 6 months, and there's 10 houses on the market. That means you have 12 months, 1 year's worth of inventory in your submarket. That is a declining market. Now, let's take the market a different way. Let's say you've got 5 solds in that market in 6 months, and there's only 2 houses available for sale. Hey, that's looking pretty good, right? You only got a handful of months of inventory on the market. I would look at that number for leases, how many houses are available for rent, and I would also look at that number, how many leases have been contracted. Now, there's some seasonality to these things. Typically, I don't see that much of a swing in seasonality. Again, depends on the submarket. So I wouldn't trust any economic data except for that which happened a few months before, and then compare that to what's available on that market at the time. So hope that helps. Go buy some houses, keep buying houses. You know, will the market crash? Who knows? Anybody who tells you it does is full of it. I've talked to guys who've been predicting a market crash for 8 years. Can you imagine these guys I think are sitting in their mom's basement, you know, eating Hot Pockets, playing Call of Duty instead of going out and buying properties. So, you know, don't listen to any of these people. Just start buying, buy, always buy. In the greater scheme of things, if you bought at the peak of the market 20 years ago, you'd still be doing really good. So, all right, guys, that's my state of the market prediction. Elijah's here. Looks like Fast Track's going to be on the radio. So, hope that's helpful. Got any comments or questions, send it to Jason at Right Path Real Estate. Thanks, bye.